This is day 4, and it's been an amazing journey so far. I'm glad you are, the responses have been very, very amazing for me. I'm glad people are finding this valuable, and that's the goal. That's the goal. That's the primary purpose for bringing this up. So. Yeah, so I got something I just wanna yourself inside my room. Let me take you. All right. Okay, so feel free to drop your comments, make your posts known, drop your charts so we can analyze them together. Yeah, that's the purpose of having this, okay, so that everyone can grow ultimately. And like I said yesterday, and I'll repeat it again. Once we are able to hit 1,000 subscribers on this channel, it shows me that a lot of people really want this sort of information on a day-to-day basis. A lot of people really want to up their trading skill, and definitely I'm just going to avail myself and make sure that I run this every day of the week. All right, I'll just make sure I run this every day of the week once I've figured that a lot of people really want this knowledge. A lot of people really would show up to ensure that we have a day-to-day streaming, where I essentially am able to show people how I take my trades and how they can go ahead and do the same. Okay. So yesterday we looked at candlesticks, and then I showed together here how you can be able to understand candlesticks pattern, how they can be able to help you to arrive at a confirmation. One other thing I feel we should need to do is to understand entry point and exit point, right? After making an analysis, after analyzing your trade, after looking at, okay, and you say, this is what I want to trade today, this is what I see in the market or thereabout. I think people also want to know, when should I make an entry? What are the signs? What are the things I'll look out for before making an entry? All right, so we would be covering that, but not today. Okay, not today. But if you have been very, very observant, you would have heard me talk about waiting for a confluence. You don't take a trade based off one information alone. All right, you're not just going to say, oh, because I see a reversal candlestick pattern, then I'm just going to go ahead and take the trade. No, you're not just going to say, oh, because this looks like a buy. I get to see that a lot, especially with people who are just getting started. They work based on, oh, it looks like they assume, they take trades based on assumption. All right, everyone is going to be at that point, at the very beginning. All right, you would start your journey from there, but remaining there is what I don't subscribe to. Okay, remaining there is what I don't really subscribe to. Okay, and that comes only with with experience. Actually, the more you try to take trades, the more you figure out the better way to be able to take them, the more you continue to find your errors, your mistakes, and then you can also provide corrections where necessary. So that said, today I want to consider more of lot size. How do you apportion your lot size, and what importance would that be when you are considering to take a trade? All right, when you are making a decision to say, oh, I'm going to take this trade or that trade, how do I apportion my lot size so that you want to be sure that you are doing the right thing? Because sometimes some people go into the right trade with the wrong lot size, right? And on the other hand, you go, of course, you go into the wrong trade, you still go in with the wrong lot size. That's double jeopardy, that's double jeopardy, double trouble if you are doing stuffs like that. The place we analyzed yesterday, this is Euro USD. I want to believe everyone can see my screen at this point. If you can see my screen, please let me know in the comment section. Let me know in the chat section, please, if you can see my screen. Just type yes if you can see my screen. Let me know. I'm waiting. I have Euro USD up here on this chart on my screen right now. And if you're watching this video, you're yet to subscribe to this channel, please go ahead and do so. It will really, really help us to reach our goals of having 1,000 people subscribe to this channel, and then we'll bring the live streams up every blessed day of the week. All right. Okay. One person said yes. I think the others are yet to respond. Okay. All right. So we have 2 yes now. Thank you very much, Prince Kelvin and Akinwande Davis. Thank you. Okay, so without wasting too much time today, these were the pairs we considered yesterday. We looked at Euro JPY. I'm yet to clear my chart for the day so that everyone who is coming in can see. Right, we had this markup, and then our expectations were that we're expecting a buy, right? We're expecting a buy. And gladly, yes, it has even surpassed. This was the place we expected for take profit, this level. and then it has, eventually surpassed and pushed way above our expectation. Okay, and everyone who took this trade will discover, yes, it didn't happen like we expected because momentum was quite low, right? We just take profit this morning. Okay, this morning was when we got to our take profit zone, which is still very, very fine, very, very fine. No pressures, very fine. All right. The usual thing I do every morning when I open up after seeing that, okay, I've taken trades, I've hit my profit or whatever, hit my stop loss, whichever direction, I come back to look at it and say, oh, did I draw it right? What was my mistake? Can I correct myself so I don't do sort mistakes anymore, and all that. Then I clear it off. I don't want to come to the market with the previous existing buyers, though the market is still in that, is still in that direction, but you will discover that every time you redraw your chart, you get better at it. Because the chart itself is not static, right? It's very dynamic, keeps changing, keeps moving. You would have discovered that some of the zones, the support regions that you have drawn, they've moved, all right? You don't want to be stuck in the past. You want to keep going towards the right side of the chart, okay? Because that's where the money is. The left is, the past. That's where previous occurrences are. You don't make money with the past, right, alone. You need the future, the right side of the chart to make money for yourself. So how do I analyze this? I can quickly come back to my daily time frame, and I want to see what happened yesterday. This was the candle that closed yesterday. This was the last candle that closed, yesterday. This is today's candle. So obviously price opened at this point, right? And then this is where price is at the moment. Price has picked up, at this point so far today. Never forget, this morning streams were trading in the London session. Okay, London session opened at 8 o'clock. All right, so we are nearly 2 hours in already into London session, and it's fine. If I'm to mark out my zones, these are the things I want to do. I think this is clear. And don't forget, this is the daily time frame. It's going to be quite large, So we'll go over to H4 to make corrections to just make it, bring it closer home. All right. What do you do? Looking at this now, what do? You can't take a trade here. All right. Looking at this, you can't just take a trade. Looking at this. Why? Because your expectation should be that what? Either price breaks to the upside, right? Comes back to retest, gives you a bullish confirmation for a buy, and then you take your buys. All right. Did you get that? You can't take a trade when price is yet to close above or beneath the zone. It's still ranging in the zone. There's no trade here yet. But let's go to the lower time frame, and see if we have ample information to be able to help us take trades. All right, coming down to my H4 time frame, I see that there's a need to correct the zone that I have drawn on the higher time frame. And then I will do this. Let me focus on this region. All right, good. I'll put my focus and attention here. So my expectation now, based on H4, is that what? I want price, this particular candle, close above this zone, right? And this candle will be closing in the next 30 minutes, there about 12 minutes now, 12 minutes. In 12 minutes, this H4 candle will be closing. All right. Let me go down to, and my expectation here is still the same, okay? If it closes above here, I wait for it to retest this zone, and then once I get bullish confirmations, I take my buy, right? I take my buy. Now, what do I do? Let me go to H1 and see what price action do I have forming on H1. Okay, good. If you're looking at this on H1 now, you can see that price has closed above the zone I drew, came back to retest, then this is the push. All right, but this is GBP JPY. I don't like to stick to sometimes I stick to H1 time frame. That's especially when on the daily I'm seeing that price is just within a major zone, right? But on the daily right here, you can see that price is at the peak of a particular zone. Price is at the peak, is at the peak of a previous position. You don't want to stick so much with the lower time frames, else you could just have situations whereby price keeps touching your stop loss, getting you out of the trade, and then keep going. It will go in your direction, but first it will take you out of the trade. I don't really like those kind of situations. So because of where price is, I didn't mean price was around here, I could take my buys based off 30 minutes, based off H1 closure. But this is a strong zone that needs to be broken, right? Because on the daily time frame, this is a very, very relevant supply zone or resistance point. Okay, so I'm going to wait for an H4 closure. I believe you got that. All right. So that said, I'm going to stick to an H4 closure here, which I think this is fine to give me less worry. To give me less worry. I won't really have a lot of things to rack my head about, in the course of the trade. So we'll come back to look out for where our take profit zone will be. Obviously, we'll need to look down to the left. We need to look way down to the left to be able to get that. Okay, so you could have your first take profit here. I think this should work. After the retracement, not here, not now. Then still looking down to the left. Awesome. All right. So this trade has another potential to reach this point. It should be the next stop. It should be the next stop. All right. So I'm going to mark it out with my rectangle much later. Once I see proper formation, I don't want to force the market to do what is not meant to do. It's just simple and basic. The trade potential here is what? When price retraces to this point, the potential is about 200 pips thereabout. It's a 200 pips potential. Today is Thursday already. Tomorrow is NFP, non-farm payroll. That's like the strongest fundamental news that affects the foreign exchange market. You don't really want to be wasting your time trading on that kind of day. Yes, except you are just willing to more like just gamble a bit. So moving next to Euro JPY, what do we see here? what do we see here? This was our markup yesterday, and then obviously price has, gone as expected, kept pushing. Now we have a retest of this zone. This is amazing. This is amazing for me. What we'll be expecting, this shows a very, very significant rejection of price. Okay, this shows a significant rejection of price on this time frame. This further continues that, but if this closes bullish, if this particular candle closes bullish, and this candle closes when? In the next 6 minutes, this candle will be closing, which is fine. This is H1 time frame. This candle closes in the next 6 minutes. If it doesn't close above the zone, you still want to be very careful before you initiate this kind of trade. Okay, you want to be patient with this, because of course the structure is showing you it's an upward structure, but we started seeing strong bearish momentum, right? Look at when price broke above, then these two candles are indecision candles, showing you that there is no direction for the market yet. Then we had this bullish push, then followed by a reversal pattern, followed by bearish. Then all these, I'm going to take 1, 2, 3, 4, these 4 as indecision candles. And this was a bullish push again, very strong bullish, confirmation. But yet it couldn't take price way there. It couldn't, sustain the buying push in the market. And then yet again, we had this bearish push. We had this strong, this is a very strong bearish confirmation, right? But structure has not changed, okay? The market structure has not changed to a sell structure, so you are still not going to focus on what? You're not going to focus on selling just yet. You see, hold on to the buy. So let me clear yesterday's chart now, and then look at it critically as we draw the charts over again. I expect that this is the same thing you start doing henceforth if you've not been doing this. Always clear off your charts of the previous days, draw them again. If you saw something fantastic yesterday, you will see something more fantastic today. That's how it works, Don't just say, oh, you've had a perfect chart, so you are going to be lazy and you won't draw a new one. No, that's too lazy, right? And you don't want to be doing that. So these are it is. Let me go down to the daily time frame just to see how yesterday candle closed. Oh, nice. Yeah, someone asked that what platform am I using? This is tradingview.com, right? Tradingview.com. So highly recommended for your analysis. All right, so I love this. This is obviously very clear bullish bullish structure, right? Very clear. Very clear bullish structure. If I'm to take my next buy with what I'm seeing, with what I just saw, I would want to expect price to come back here. I'll go down to lower time frames, and then we can see clearly. But this will be what I'll be doing. My expectation will be this. All right, this will be my expectation, and this is lovely. I love this. I love what I'm seeing. Okay, so if you're intending to take buys, where are we buying to? This region would be nice. Then next is this region. And next is this region. Oh, fine. Okay, good. So we can begin to say potentially, if the bullish pressure is sustained from where price is right now, the potential is, oh my God, this is going to be about 700 pips. Potentially, this is 700 pips, right? Is this, this is very fascinating. Very interesting. It might take like 2-3 weeks to happen. So this will just help you once that this is one of the reasons why I don't trade too many pairs personally. I could help my students analyze, their own pairs, but every day in, day out, the only two pairs I trade, GBP JPY and Euro JPY. I don't trade anything else, okay? Because you want to focus and ensure that when I see, okay, this is the potential of this trade, when is it going to happen? It may not happen. It may not happen in a week. It may not happen in 2 weeks. So I just want to ensure that I milk this process, this particular one that I've spot, and then really, continue to just be around it for a long time, which I feel that's the best thing to really, really do. Trading multiple pairs doesn't make any sense to me. It doesn't really make any sense. All right, so on this now, on H4, what's my expectation? All right, this is quite dicey. It's looking quite dicey, such that this is a zone that price could and should come back to retest this particular area. I'm expecting that price should come and retest here. Of course, price can retest this place. You could retest this area and then start going back up. But let's do the right thing. Let's just have one expectation. Okay, so all right. So H4 is closing. All candles should be closing in the next 4, 3, 2. Yeah. So just closed. So my expectation here is that price should come back here. Price should come back here. Then we take our buys. And then where would be our first stop at that point? Let me go to H1. If you have questions, don't hesitate to drop them. I'm looking over every question and I'll be attending to your question. Okay, so H1 now looks like price has already retested this area. All right, that's what H1 looks like. So let me do this. Okay. Do you understand this? I'm picking out minor zones. All right, so yes, this looks more like it's on H1. So my expectation now will be that if price should retest this level, I look for buy entries, and then my first trade potential would be in this order. All right, so you start taking them in bits now. 48 pips. All right, and this is fine. This is fine. So we're just going to sit back, watch, wait for when price reaches this zone. You can mark out the same thing on your chart, it will really help you. And on the other hand, if price fails to come to this zone, what can I do? when I see bullish confirmation or a bullish confirmation above this minor zone, once I see something beautiful above this minor zone, I can take a trade. Of course, then what do I do? The potential will now be what you're going to make, the pips you'll be making will be smaller. No doubt. Say you have about 16 thereabout pips, which is still cool, at least fairly cool. And then it doesn't stop there. Now you can do this. If price reverses here, and then you can do this, and then you can expect this on the on the other hand, you can as well take it all the way from here. Of course, price won't go in that linear direction like I'm trying to draw. Can I have this? There is always going to be a retest. At periods when there are no retests, just ignore the chart. It means something abnormal is happening, okay? When there's no retest, it means something abnormal is happening. You ignore it, okay? Retests should always happen. That's what shows that the market is ideal. In an ideal market situation, there would be what? There would be retest. There would always be a retest, a retest, a retest. So it's going to be, this is the potential now. This is what you should be looking out for. Right? Okay, so let me, and then those who traded Euro USD, beautiful, 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 beautiful formation I'm seeing on Euro USD. For my students who are a member of the Pips Mastery Academy, you would have seen me talk about patterns, right? The bullish patterns, the bearish patterns, your head and shoulder, inverse head and shoulder, double tops, double bottoms, triple top, triple bottom, which some people also refer to as either your W formation or your M formation, the cup and handle, what else? Yes, this is a typical example of a cup and handle situation that we are seeing here. And then all things being equal, we should expect a very, very strong buy push. A very, very strong buy push. Now, the principle of demand and supply really doesn't focus on pattern. But if there is a pattern, right, instead of you looking out for just pattern, demand and supply will ensure that what you don't miss out on the trade. Demand and supply will ensure you don't miss out on any trade. This is why someone who trades, because every pattern, every principle, every indicator, every whatever you want to use to analyze the market, they rise and fall on what? On support and resistance or demand and supply zones, okay? So why not just go for the foundation? Why not just go for the substance itself, right? This is why I really don't want to always focus on all of those patterns. Are they good? Are they amazing? Yes. When I see them, yes, it just helps. Like I use them to more like further justify or just to further support my choice of taking a trade. All right. I use them to further support or to further, uphold my choice of taking a particular trade. All right. So if you're looking at this, you could start doing something like this. This is strong rejection. If this demand zone holds, expect price to push past it, you know. So we can do this. Let's see. But we need the market to first give us that go ahead to show that it is time. I'm not comfortable with this kind of price action. This bearish. This is bearish without a wick at the top. You know, very little wick at the bottom. This is more like either it shows either exhaustion, right? When there are very, very little or no wicks on a particular candle, it shows either exhaustion or excessive strength, okay? Either exhaustion or excessive strength. So you want to be very careful. I'm still not cool with the price action that I'm seeing here. Look at this also. This shows a strong rejection, you know, right? The candle closed the same place where it opened, right? And this is a clear, you know, it's a clear doji, but obviously it shows that what there were more selling activities. The selling pressure was much, the buy pressure was entirely what rejected. All right, so that's what it is on this. Any questions so far? I'd like to know from everyone who is following via YouTube. I'd like to know, what are your questions, please? Let me sit back and take one or two questions. Okay, I'm waiting. I'm waiting to have your questions. And in the absence of any question, we're 14 watching the stream right now. I would appreciate if the 14 can hit the thumbs up on this video and also share with your friends. It will really, really go a long way. All right, so this is the thing I would want to talk about lot sizing today. As you know, lot size is like the contract position, or let me say the value in which every pip for you or against you is actually awarded, right? So every pip, every time the market moves in your direction or against your direction, your broker is entitled to what either deduct or reward you based on the lot size that you have initiated the trade. And this is why I say there are 3 levels of that. You have your micro lot size, you have your macro lot size. I won't spend time on this, it's very, very basic. And then you have your standard lot size. Now, every lot size, people ask me, what's the appropriate lot size to use? I would say, firstly, your lot size would depend on your risk appetite, okay? It will firstly depend on your risk appetite. There are some people who love to take excessive risk, you know. I really can't be the judge here to tell you, use so lot size. But let me let you know the implication of every lot size you decide to use. The least lot size on most brokers is 0.01. That means every pip, right? Every pip for you or against you is given to you at what? 10 cents of a dollar. That's 0.10. All right, 10 cents of a dollar. Then the maximum of this what's it called micro lot is 0.09 cent, 0.09 pip. I mean 0.09 lot, and that will mean what? 90 cents per dollar. All right. So what am I saying in essence? If let's say for any lot size you're using, we're just going to say assume you are making 20 pips, right? You are making 20 pips. So if you make 20 pips, what does this mean? It means times 20, and that would be what? $2. You will make $2 with every 20 pip when you're using your lot size of 0.10. And at the same time, what do? When you lose 20 pips, you also lose just $2 with that lot size. On the other hand, if you're trading with 0.90 lot size, the implication will be that for every pip that you make or you lose, you're going 90 cents. So 90 cents times $20. 90 cents times 20 pips. I don't know why I mix this up sometimes, That would be $18. I hope I'm correct. I hope I'm correct. Yeah, $18. Then on the other hand, if you're trading with the macro lot size, it means you're using the lot size from 0.10 to 0.90. All right, this is your macro lot size. So yeah, you're saying that every pip for you or against you is given at $1 per pip. And that means if you are winning or losing 20 pips, that means you have plus or minus what? $20. And on the other hand, if you are trading with the lot size of 0.9, the implication is simply that what? Every pip for you or against you is given at $9. $9. So what does that imply? If you have 0.9, sorry, $9 times 20. That's exactly $180. So the question you always ask yourself is, if I have maybe you have a $500 account, all right, and then you want to trade a $500 0.5 lot size, that means you are ready to risk $5 per pip, right? You're ready to risk $5 per pip. It means that your $500, once you lose, how many pips that'll be? Once you lose 100 pips, your $500 will be wiped out. Okay. On the other hand, once you make 100 pips, your $500 account will be doubled. All right. So you need to just figure it out. Though I recommend once you are starting out as a new trader, start with the micro lot size. Okay. Start with the micro lot size. Why? You need to get yourself accustomed to how the chart moves. You need to get yourself accustomed to your risk appetite. Can you really, what level of risk can you really hold? Okay. So trading, as it were, people ask me, how much capital do you say I should start with? So it's going to vary from person to person. So if you are maybe someone who is already a multi-millionaire, losing maybe $1,000, $2,000 means entirely nothing to you. You get, if it means entirely nothing to you, it's going to be a different ballgame compared to someone whose entire worth is just $1,000. So they would not, it will be very, very difficult to make a one-time or a general what's it called rule to say, okay, this is the lot size or this is the account size you should have. You know what you are able to lose, that you won't go gaga, right? The amount you will lose, and you won't lose your peace. All right. Nobody's comfortable losing money in trading, right? Or in anything at all. I've seen people who are able to give out 50,000 naira in cash, and say, oh, take, I gift it to someone. On the other hand, they come in trading, they lose 50,000 naira, and then they are going very, very sick. Okay, so you need to be able to understand, what are you comfortable, really, really comfortable with losing, that won't let you lose your mind, that won't scatter your learning curve, because the more losses you keep taking at the beginning, the more problem you keep having to your learning curve. All right. I'm seeing some questions here, and then I would be attending to them shortly. So for standard lot size is from 1.0 to infinity. That means you're taking what, $10 per pip, right? So $10 per pip, and then if you make 20 pips or lose 20 pips, it means you have $200 in the bag. Okay, it means you have $200 in the bag. Some people I've seen, the craziest I've seen is this guy Ted. Ted uses sometimes 100 lot, right, on a particular trade. That's $1,000 per pip. It's crazy, man. It's crazy. If you use 100 lot, that's $1,000 per pip. You need to have a very large account size, to take that kind of trade. So when someone is saying, no, I made so amount, it means you and I can go in on the same trade, make the same amount of pips, but at the end of the day, we don't have the same kind of financial result or reward. Okay. And on the other hand, don't forget, when someone is trading $1,000 per pip, when he takes a trade, and is losing 10 pips, man, he just lost $10,000, right? That may be your another person's entire worth, as it were. Okay. Oh my God, I wasn't sharing my screen, man. I wasn't sharing my screen. It's fine though. All right, so this is what it is, guys, on lot size. Now we'll go back to look at our trades that we are expecting to have for the day, and see if we have something good happening in there. All right, so someone said, are we trading just Euro JPY today? I won't be able to say yes to that until it gets to our expected zone. Yes. On the other hand, if you are looking at GBP JPY, also expecting that price comes back to retest this level, yes, there's still a buy entry over there. Also, if you're looking at Euro USD, also you can have an expectation on when to go in on the trade. I just love the clarity I'm seeing on the charts today. Very, very friendly, sort of. Okay. Okay, gospel came in late. Is it advisable to take multiple trade on a particular pair? Let me address the question of taking multiple trades on a particular pair. This is how I do that. Okay, I take multiple trades, multiple positions on a particular pair. So if, for example, I'm meant to go in on the trade, maybe I want to use 3 lots or 5 lots. For an example, I want to use 5 standard lots. I know I'm risking that's $50 per pip. That's quite much. What do? I mean, decide first going. My first entry could be maybe 2 standard lot, right? I just go in 2.0 first. I know that my account size is able to take 5 lots, but I want to ensure that the entry I have on my first entry is quite very, very reasonable, right? Very, very reasonable entry. You need some level of confidence to be able to do that, which is, it keeps coming the more you do, right? So if, for example, you want to go in on 0.1, you don't need to use excess, standard lot before you can go in on multiple positions. If you're using 0.1, for example, you can break it down into 3, and okay, on this trade, maybe the entire loss is about 20 pips, and you want to use 0.1, you are going to lose just $20 on the trade. You can then decide to go 0.03 twice, or it will be 3 times now. Okay, you can do 0.03 twice and 0.04 once. That still makes up to what? 0.1. Okay, so every time I'm trying to go in on multiple positions, I'm not repeating. If a trade I'm to go in with maybe 1.0 lot size, if I look at the stop loss, maybe the stop loss is about 30 pips. I know, okay, I have the chance of losing about $300 on this trade. I'm not going to go one lot 3 times. I'm not going to do 1.0 lot 3 times on that particular trade. That will mean you are now risking $900 on the trade. Okay, so what I will do instead is to split my 1 lot into about 2 or 3 positions. So I can do 0.5 twice. Take the first entry when the trade gets to a very comfortable level and I see that, yes, this setup is tight, my confidence level has increased on the entry, I can then add another entry. Or sometimes in a situation where, for an example, I look at if price comes to this particular point on the chart I'm on now, this Euro JPY chart, look at this. If price gets to, oh my God. If price gets here, right, and I initiate my buy position, maybe I go in 2 lots here, and then price continues. Since my ultimate expectation is that price will come here, right, that price will get to this point and likely still keep going up. What I'll do is this: take this trade to this point. Then once the conditions here are met, at the pullback here, I move the stop loss of this particular trade, because when I enter this trade here, very likely my stop loss will be somewhere here beneath this point. I now move the stop loss of this particular trade. Maybe once the trade is here, I can move the stop loss into profit. So it means that on this first trade, there's no risk on it anymore. It's only the new trade I initiate here that will have a stop loss maybe beneath this point. Now, when this gets to this level and then meets all the condition, I can now move the stop loss of these 2 entries maybe to this point. It means that even if the trade now begins to go against me, I'm not going to be losing so much on it, other than the only position I last opened, right? The position I last opened would be where the loss would be. This is one style to approach it. It's very, very easy to explain, but I'll be honest with you, it's not easy to implement. Okay, if you don't implement it right, you end up losing money. So you can have a trade that is meant to be a profitable trade where you see the direction and or everything, but you still end up losing your money because why? You didn't manage your risk appropriately. So risk management is, very, 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 very essential. We would be touching that, at certain levels, maybe next week or at some other opportunities that we have. Okay, we'll still touch that. Okay, did I answer your question, please? Did I answer your question? All right, don't forget to hit the like button. Once the video is up there, don't forget to add your interactions. Let's get this going. Okay, so we're still waiting for the right time to take trades. For the Pips Mastery Academy students, I'll keep on the watch, and when the time is right, I would still announce this trade. For those who are asking about what broker to use, if you want to use the same broker that I use, you can check the description box of this particular stream. You would find answers to that in there. If you want to get my book, you'll find the how to do them right there. If you subscribe also to my channel, turn on the notification bell, you would continually get amazing content I drop about Forex and trading or life in general from time to time. Scroll around on my channel, you have myriads of videos that can actually help you to become a profitable trader in there. So at this point, we won't call it a day, guys. It's been an amazing 1 hour straight of sharing, my thoughts live, today with everyone here. It's such a pleasing pleasure to have you guys, showing up day to day. And tomorrow is going to be NFP. So we're not taking trades tomorrow. We're just going to come, make it more interactive. I want to hear your thoughts, your journey so far. That will be what we'll do tomorrow. Okay. Thank you very much, everyone. Peace.